Remember November. November's already behaving like October, delivering dramatic volatility instead of calm and upward movement. November's market signal, does the market point to a downside continuation, or will the market roar back into lifetime highs before year end? And the looming resolution of the government shutdown, likely this month, could act as a catalyst for markets moving forward into the end of the year. Stay with us. This is your CB3 Financial Weekly Podcast, and it begins now. Last week, the U.S. stock market was anything but smooth, and historically, November has been fairly smooth as it's the strongest performing month of the 12, but not in 2025. The broad indexes ended with mixed results, fragility showing up just when momentum seems strong. The S&P 500 dropped about 1.6% for the week, and the NASDAQ fell 3% as tech stocks stumbled. Really ugly end to the week, except for the push at the end of the market on Friday, and we're seeing a continuation of that here Sunday night as I record this, but there's really no guarantee that this is the way it's going to continue Monday when the market opens. Again, I'm seeing this volatility resembling more of October's behavior historically than November. Meanwhile, the Dow Industrial Average ended modestly positive for the week, but that masked the internals, okay? Breadth is weakening and the top stocks remain dominant, and that has been the case now for years as the huge trillion-dollar companies continue to dominate all stock market activity. I mean, let's face it, NVIDIA is almost 10% of the S&P 500 right now. So when those leadership stocks fail, that brings down everything. When they catch a cold, you've heard the market catches pneumonia. So even though upcoming historical data signals that November continues to bring gains over the decades, it's just been that strong. The current setup right now for November is more vulnerable than normal. Why? Valuations are stretched, credit and data concerns are lingering, and event risk is elevated. Why? Because of the government shutdown and what that could mean for the continued faltering of the airline industry, where 20% of flights could be canceled by December 1st. Right now, it's about 10 to 12% of flights. So the number one headline we need to be focusing on is the tech-heavy NASDAQ logging its worst week since April. We're going back more than half a year. The VIX and other risk measures spiked, showing that the market participants are less comfortable than earlier at this point in the year. And the cooling in tech and profit-taking among the big names really hit the sentiment for the buyers, for the bulls. From a traditional standpoint, markets rally on certainty, falter on uncertainty, and definitely nosedive when things turn to a panic. And we're certainly not there yet, but we saw some profit taking, normal for this time of year, but more so in October than we would expect in November. Right now, we've got more of this uncertainty than we'd like to see. So this is what's going to set us up for Thursday night's show. We're going to dig in deeper into which sectors are cracking, which are still standing, and what a break in volatility would look like. So will November weakness lead to further downside or to a sprint higher into new lifetime highs as the year finishes? My money right now is on the latter, and we are still positioned, fully invested in all three programs. But this past week's data threw a wrench into just keep on going and buying the dips narrative, all right? So AI and big tech leadership appears tired. The concentration of market gains is raising warning flags, and this is what I mean by when I said earlier, when you've got a stock like NVIDIA taking up almost 10% of the S&P 500, that's an eyebrow raiser for sure. But it is giving other opportunities for industrials and financials and other portions of the economy to come in and start seeing some improvement there. Even if the money rotates from the Magnificent Seven and basically the DS stocks, the AI, the quantum, and rotates into the sort of CG program that we have, which is going to be a more smattering of different sectors, but always the leaders in those sectors. That is still fine. We want to see rotation, but we don't want to see retreating and pulling money out of the market and putting it into bonds or even money markets. We're not even close to seeing that yet. This has just been a garden variety pullback. It's just happening in an unusual month. So we're at a junction. Either the markets build a bottom and bounce into new highs, or they crack and go into a deeper correction. We don't want to see that going into year end, certainly, because that can affect sentiment, especially if the government stays closed. We're going to explore this dichotomy in Thursday's show, so I strongly urge you to be here this Thursday night, 7 p.m. Central, for CB3 Live's November show. The government shutdown is likely going to end this month. I'm seeing signs of it right now because of the SNAP program anxiety and because of the airline anxiety. That's just not going over well with the American population. And I think both parties have got to get to the table and get this resolved, even if it's just simply a continuing resolution that pushes the ball or kicks the can, as they say, down the road into January or February. So Congress is moving towards a resolution. I think this is going to happen, and it's a potential positive catalyst for the market to finish the year on a strong note, especially if the continuing resolution moves into February rather than January, in my opinion, because the Santa Claus effect really wants to continue into January. February, historically, is where we start to see our first little pullback during the calendar year. Historically, doesn't mean that'll be that way in 2026. But on the flip side, a long dragging out deal or a messy resolution could keep the market cautious, pensive, and basically just waiting to see before buying what's going to happen when the government's going to get reopened. So on the flip side, a long dragging out deal or a messy resolution could keep the market cautious, and that's not what we want to see heading into the end of the year. So looking ahead, what am I watching for this coming week? Well, first of all, I want to see market signs of anxiety ebbing if we can get a shutdown release from the government. We can get the Democrats and Republicans to sign at least a continuing resolution. We're stepping into what is historically the strongest trading month of the year, although it has not been to date, and today is Monday, November 10th. So it's really important that the government situation gets resolved and we can open back up those 900,000 furloughed workers and the TSA. Nobody wants to be stuck in an airport over Thanksgiving, right? We need to see the data releases. We've seen no data releases of government information that we're used to seeing and reporting on this show, and everybody else around the world is. Haven't seen any of those for 40 days, so that needs to happen. The tech sector breadth needs to come back in full force as we finish the year. We want to see money continuing to pour into Magnificent Seven, quantum, and AI stocks. The shutdown resolution needs a news flow that this timeline is acceptable, neither side had to cry uncle, and that everybody happily came to a resolution, and the Congress is going to live happily ever after. Yeah, that sounds corny, but that's really what it needs to be. So the valuation and expectation reset with stretched valuations that I mentioned earlier and concentrated leadership, that means just a few trillion-dollar companies are what's pulling the market along here as we finish the year. We probably will need a little more digesting of the recent gains before moving visibly higher, but I do believe we will spend the rest of this year, meaning about 7 weeks, moving slowly higher and finishing near, if not at the high for the end of the year. So last week reminded us that this rally is not bulletproof, all right? The signs of fatigue in tech and the constant backdrop of government uncertainty are now more real than ever, that we are in the longest government shutdown in history. That said, the environment is still bifurcated. There remains a path to new highs, but only if key support levels hold and catalysts align and the government reopens. So for this week, stay awake, stay aware. Watch our show on Thursday night. Put it on your calendar. We're now moving into the 6th year in January, but we're going to bring you important information that you need to know about how we're investing your accounts as we close the year. Thanks for listening. We will see you Thursday night on CB3 Live and next week for the CB3 Weekly Podcast.